Hello traders, Gary Wagner here, just before 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island, September the 6th, 2019, and this is the Daily Report for Gold and Silver, our week in review. And what a week we have seen. The selling continues now for a second week in a row. The last 2 days have been quite hard on the precious metals, with statements coming out, first of all, yesterday by the Chinese and the United States indicating that they were going back to the negotiation table in October. Then today we had the jobs report, which came in weaker than we have seen, but more importantly, a statement made by Chairman Powell in Zürich, Switzerland, and that also added pressure to the precious metals. It also added pressure to U.S. equities. We are flat in the market, and on today's show, I want to talk to you about the entry points I am hoping we can see next week. Let's take a look at our technical studies and charts. As you will see when we pull up our technical study charts, that we are getting very close to potential support in both gold and silver. We'll outline the exact pricing when we pull up our charts. But as for today, gold closed down $10.50, currently at $15.50, about a 0.7% decline. Silver fared much worse, losing almost 3%, a 53.7 cent decline. Silver basis December is currently trading at 18.27. We also had some of the other markets trade lower, and Bitcoin itself lost about $200, but still remains above 10,000. Let's take a look at our charts. We are looking at gold futures, a daily chart, and what we can see is the point we identified months ago, which was roughly 1564. It was based on a Fibonacci extension. The extension was looking at this first leg of the rally here, and then began after a correction here, and that's how we acquired these numbers. Without a question of a doubt, we definitely found a resistance area. And what's odd is it was based completely on remarks and fundamentals. Nonetheless, this gave us a real indication that the market could be top heavy right in here. Now, we'll convert that to a weekly chart, and it will become even more evident as to where this market is headed. We can see that over the last 2 weeks, we have seen the market trade lower on the week. We've also seen equal highs, and these equal highs are coming in right at 1564. And so the area that we really want to look at now that gold is at 1515 is 1496, because what we're seeing there is a Fibonacci harmonics based upon a fib extension and a fib retracement, and that's quite interesting. We can see this price point of the 1.23 extension at 1493, and we can also see 1496 being a 0.23% retracement, and the retracement is simply from this beginning of the rally up until these highs. So I find that quite interesting that we've got these things lining up. We're also getting a harmonics, though, at the 0.38% retracement, because that matches up almost precisely within $1 of a 1-to-1 extension. Because what we see is here's the 1-to-1 extension that comes in at 1451. The 0.38% retracement comes in at 1452. Therefore, traders, my recommendation is to maintain a neutral stance with no active trades in gold or silver. What we want to look for next week is whether or not gold trades lower, and if it does, whether or not it finds support at around $1,500 per ounce. Silver is, however, trading to a different drummer. The percentage gains on the way up have outperformed gold, and the percentage losses have outperformed gold. Now, when we look at this weekly chart, what we can see is quite amazing. We had a tremendous drawdown this week in which it hit this top at 1973 and then traded lower. On this daily candlestick chart of silver, we can see that the last 2 days have had a tremendous drawdown in terms of price structure. What we're looking at is follows. When we do a basic fib retracement from this leg of the rally, the next possible target that it could hit is going to be 1792. That's the 0.38% retracement. If it holds there, finds support, that would be a good entry point. If it breaks through there, we're going to look at 1734.8 as a possible entry point. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.